The world's political and business leaders met up in the Swiss resort of Davos, Switzerland recently. This 54th annual Davos confab occurred against a complex geopolitical backdrop beset by war, tectonic shifts in monetary policy, climate change, and comes early in an uncertain U.S. presidential election year. Well, our chief equity strategist and economist, John Blank, is here to comment on all of that now. John, is this another year where no news was made there?
Yeah, I think so, Terry. There's always going to be geopolitical risks, and the market doesn't care. There's always going to be elections in various parts of the world this year in the United States, but usually markets in front of elections in the United States after a good year in the third year do fine in the fourth, so even that should be not a big deal for investors.
You know, one key event that I saw that was happening there was the financial services governors meeting. Could they even come up with ways to navigate this complex geopolitical environment?
Yeah, Terry, this is a closed-door meeting. It was run by Barclays and Manulife Financial. It's curious, given the criticism of Davos, they'd run it closed door, but they did. I suppose they think they get more frank dialogue doing that. But in truth, I don't know that 100 bankers closed in a room in Switzerland have a better insight than all of us do about the U.S. economy or the global economy for the next year. It's a long year, and you're just best appraised to, applauding, updating over that year, not some kind of grandiose beginning in the early stages of it in January.
So all of this really meant nothing to the markets then, correct?
Yes, absolutely nothing.
Something that may have market impact is the Q4 2023 earnings season, which is underway. What key takeaways are you looking for that might have an effect on stock trading?
Well, we basically just want to make sure Q4 gets put to bed as a somewhat positive quarter, which is doing. And the Q4 GDP report this morning of 3.3% growth is a really strong assist that this is, in fact, the case, because that will match up with these earnings reports. And then, of course, the other fly in the ointment is the outlook for 2024 from these groups.
Tech earnings have come in. They seem to be fairly upbeat. How important do you think earnings of the Magnificent Seven are going to be to market leadership this year?
Well, ex-Tesla, which has now been iced because of cyclical issues in the automotive businesses that will affect EVs, I think they matter a lot, and people will keep on keeping on with them. I certainly have been looked into Amazon and Microsoft and Apple and Netflix, of course, yesterday did strongly. So, yeah, they still matter.
So do you think then that big tech is going to continue to fuel a meaningful stock market rally?
I think so. I think you got to be bullish tech. I mean, remember, the S&P is now 30% tech companies, highest ever. So it's getting to the point just from a concentration perspective where you have to stay with tech.
All right, let's shift the focus a little bit. Is the timing of rate cuts still a main market focus?
Yes, it is. But, we had a January meeting coming up here next week, which is, not being counted for in any way, which may be a mistake because there might be some surprises there. Everybody's betting to see or not see a rate cut in March, in the March meeting. They skip February this year. And I think that's too aggressive. I think the Fed will wait till the summer.
What then is the biggest risk to the U.S. stock market now?
The biggest risk is aggressive bond traders who overprice the number of rate cuts that the Fed's going to deliver into the market. They're looking at 6 rate cuts here over the course of next year. And, speaking as an economist, I think the Fed's a lot more cautious than that. They're going to make sure they get the job done. So I'm really surprised if there's more than 4.
What about global market risks?
Well, Terry, we got a war in the Ukraine, which has never mattered to stock markets. We had a war in Israel and Gaza, which even though, the Qs are heavily influenced by Israeli tech stocks, Gaza is 2 million people and is basically irrelevant. So, Taiwan is now off the table, it seems, in meaningful ways. So all these countries get a lot of news production, but I think an invasion of Taiwan would be the material one, not the other two.
Strong buy stocks that you're watching include NVIDIA, Taiwan Semi, speaking of Taiwan, and Novo Nordisk.
Yeah, let's talk NVIDIA. First off, growth for score of A with us, number 2 rank. I got a $615 share price staring back at me. PE ratio forward, PE ratio of 50, which is basically calling for 50% growth. I'm a seller of NVIDIA. That's too steep for me. I can't buy a stock like this. I'm a seller of NVIDIA. Taiwan 70, actually a D for growth, Kerry. D for growth. I did not misspeak. And a 19 forward PE. There's not a lot to like in the chart for Taiwan Semi, but I do think you can get from 116 to 140 on a recovery of that share price. And Novo Nordisk at 105 is got a forward PE of 32. Also, probably fully pricing in this obesity drug that they've managed to catch on to. So, I'd probably be a buyer of Taiwan Semi and a seller of NVIDIA and Novo Nordisk.
Our chief equity strategist and economist, John Blank, on earnings and the markets. With John, I'm Terry Ruffalo. Here's something you might want to check out. Zacks Ultimate gives you 30-day access to all of our buys and sells for only $1. Zacks.com/promo for details.
This material is being provided for informational purposes only, and nothing herein constitutes investment, legal, accounting, or tax advice, or a recommendation to buy, sell, or hold a security. Do not act or rely upon the information and advice given in this podcast without seeking the services of competent and professional legal, tax, or accounting counsel. Publication and distribution of this podcast is not intended to create, and the information contained herein does not constitute an attorney-client relationship. No recommendation or advice is being given as to whether any investment or strategy is suitable for a particular investor. It should not be assumed that any investments in securities, companies, sectors, or markets identified and described were or will be profitable. All information is current as of the date herein and is subject to change without notice. Any views or opinions expressed may not reflect those of Zacks Investment Research as a whole.